Alright, so in this video, I want to backtest selling puts in probably one of the worst month in history, which is March 2020. Basically, if you watch my previous videos, you know that I sell put spreads on the SPY, but I'm trying to test something else right now. I want to start selling naked puts on a weekly basis. So from Monday to Friday, sell naked puts. But of course, going naked means that there's unlimited risk. The loss can be enormous and you don't know what your loss could be. At least with put spreads or spreads in general, you're capping your losses. You know what your max risk is. But to each, spreads have their advantages, and obviously naked puts have their advantages. With naked puts, you collect more. You can also go a bit further to make the trade safer. It's easier to manage as well because you never have to buy that option for protection. So it becomes easier to manage, easier to roll if you want to roll. So I'm gonna test it out using the Russell 2000 index, or basically the ETF that tracks the Russell 2000 index. So it's an index, so normally indices usually go up over time. So like the SPY or the Q, they don't necessarily move in the exact same way, but in general they go up over time. So you can look at max since 2000, it's always going up over time. It will have periods where it drops, but as an overall, it's always going up. It's all in a 20-year period, for sure it's going to be higher than what you started at. So I want to test it out, especially during March 2020, if I had sold naked puts on this ETF from Monday to Friday, open on Monday morning and then close on Friday, regardless if it's a loss or not. So I downloaded the historical prices from Yahoo Finance over here, and I also downloaded the VIX prices just to get an idea of the volatility on those days. All right, so here's the Excel spreadsheet. So here's the date, here's the open price, the high of the day, the low of the day, the close, and this is just basically telling me if it's Monday or Friday. It tells me which day of the week it is. Here I'm going to mention if it's a winning week or a losing week. And this is the VIX to give me an idea of how much premiums could possibly be collected. When VIX is higher, premiums are higher, and also you can go further out for more protection, making the trade safer. So I'm going to do March, but let's just start from January 2020 just to see how it would have impacted the beginning of the year. So I'm always going to sell a naked put out of the money from Monday to Friday. So let's say we start with Monday, January 6th, and we go till Friday, January 10th. So on Monday open, IWM is trading at 163, VIX is at 13, so it's considered low. So probably my short strike, the naked put I would have chosen, would probably be around, probably 5 points lower, so probably around 158, let's say, and probably would have collected maybe $1. And so as the week goes by, actually as the day goes by, IWM goes to 165. Maybe I will have had a chance to close it for 50% profit. Who knows if I would have taken that or not. It closes at 165. The next day it opens at 164, 165. So definitely already in the first 2 days, I definitely have a chance to close this trade for 50% profit. But let's say I want to go to the expiry and just extract all the premium possible. On Wednesday, it's still trading 164 and even reaches a high of 166. Definitely for sure could have closed this below 50% profit here, or sorry, above 50% profit. But let's say once again I went till Friday, it would have expired worthless because my strike's about 158, 157. So this one becomes a winner. So that week is a winner in terms of selling naked puts. So let's say I did one contract. So for example purposes, I'm just going to do one contract. Let's say I did one contract, I collected $1, I said. So that means I would have made a $100 profit that week. So that's assuming I didn't close it for 50%. Normally, I think I would have closed for 50%. So let's put my numbers. Let's put what I would have most likely done. So let's just put what I most likely would have done. So I'm going to put $50 as my profit. But I could have easily waited till the end of the week and kept all the premiums collected. Plus, I'm not even sure if these are the correct premiums. I'm basically estimating based on VIX and based on my experience from watching these stocks and price options and from watching these options all the time. All right, so I get my capital back. I got my $50 profit. Remember, I'm just doing one contract for example purposes. Next Monday, I do it again. Monday open, IWM's at 164 or even 165. So my strike will be probably 160, and I'm going to collect, let's say, maybe 90 cents. $1.95. Let's just say $1, easier to work with. And as the day goes by, it goes up to 166, closes at 166. Next day it's at 165 as well, goes to 167. So definitely over here, I probably have a chance of closing for 50%. And even if I continue till Friday, I would have kept all the premium 100%. So I'm gonna say $50 because most likely I would have closed it at 50%. Now the reason I most likely would have closed it at 50% is because I know anything can happen. I know that anything can happen with 5 days or a few days remaining. I could definitely get a surprise and the stock drops below my strike easily. All right, so got my profit, got my capital back, and now there is no Monday for the following week, so it'll be a Tuesday. Tuesday market opens at 168, so my strike will most likely be around 162, 163. VIX is still 12, 13. I'll probably collect maybe, I don't know, 80 cents. And my short strike is 162. I probably don't get a chance to close it here, neither Wednesday. But we're definitely getting closer. Probably around Thursday I can close it. But probably with 1 day remaining, maybe this time I'll let it expire worthless. Maybe around here I start to panic on Friday when it reaches 164. I regret not closing it for 50%. Probably I would have closed it for 50%. So let's go $40. And as you can see, VIX starts to go up a bit because the market is dropping, VIX is increasing, volatility is increasing. So I got my profit, I got my capital back, and then next Monday opens. Look at that. The market opens at 160, IWM opens at 162.85. So good thing I closed my trade on Friday, got my capital. Now I open a new trade at 162.85. My strike in this case, I've got a VIX of 18. So my strike is I can definitely go further and I'll be collecting a bit more. So let's say I'm probably going to be maybe 7 points, 8 points away. So let's say my strike will be 155 and I'm going to collect, let's say $120, $130. So 155 is my strike, and then the day goes by, I'm at 164. Maybe I have a chance to close it for 50% on the same day. It closes at 163. Maybe I don't take it. Next day, 165.40. Definitely I get a chance to close at 50%. After seeing IWM drop from 165 to 162 from the weekend, or even 168 to 162, I will probably close it at 50%. I'm not taking any chances. So I collected about 130. I'll close it for about $65. So this one is also a winner. Now I could use a software that does all this back testing, but I'd rather go into this manually myself just to give myself the best simulation possible, just to see what really I would have done if I was living it. Because most likely I'm not going to place my trade on Monday and just let it go to Friday. I'm going to be looking at it probably every day. So this is more realistic by going through the days, the highs and lows of the day, and trying to replicate my action. All right, so I closed the trade for 50%, got my profit back, I got my capital back, and then I wait for Monday. Monday, IWM opens at 161. VIX is still around 18, so I'm going to probably take a strike of 154, 153. Collect maybe another $130. So as the day goes by, it goes to 162. Probably won't get a chance to close it at 50%, but close. The next day it reaches 165. So for sure here, I'm closing it at 50%. So another $65 week. So another profitable week. All right, so I got my capital back, and then next Monday, IWM is at 164. VIX is lower now. VIX is at 15. So I'm probably going to be maybe 6 points away. So let's say 158, probably collect $110. So my strike, I said, was about what, 158, 159? I'd say 158. And so as the day goes by, IWM goes up. Maybe I'll get a small chance to close it. Definitely on Tuesday, I'm getting a good chance to close it for 50% because it went from 164 to 167. Remember, I'm selling that put at the open price on Monday. So from 164 to 167, that put that I sold is definitely going to be worth 50% less right now. So I said 110, so that's a $55 profit. So I'm definitely estimating the dollar amounts, but whether they are winning weeks or not, that's accurate if it's going to be a winning or a losing week. It's just the dollar amounts that's an estimation, because I don't know what the prices of the options were. I'm just estimating, but I'm pretty sure it's close. All right, so I got my capital back. I wait for next Monday. There is no Monday. It's a Tuesday. IWM's at 167. So my short strike is 162. Now, all right, so Tuesday, IWM's at 167. I'm probably going to sell at a 163 maybe strike. Collect maybe, I don't know, 80 cents. And I could see that on Wednesday, I get the chance to close it for 50%. So that's a $40 profit. So it's another winning week. So Friday, I'm out. I'm probably out before, but I don't do anything till next Monday. So I have my capital back and I wait next Monday, and look at that. Next Monday, IWM went from 166.7 on Friday to 161 on Monday. So I'm starting the week with a IWM at 151, and look where the VIX is. VIX is at 25, so pretty high, almost where we are at right now. So 161, I'm probably going to sell maybe 7 or 8 points lower. So my strike will be 154. And so I'm at 161, and look at that. Same day, it goes to 167. I'm definitely closing it for 50%, not taking any risks. So if I close it for 50% on that day, and I said VIX is at 125, so I probably collected maybe 140, 150. So let's say I close it for $75 profit. And actually, it's a good thing. So I went from 161 to 167 in the same day. So definitely I'm able to close that put for 50%. And a good thing I did it, because if I don't, the next day, look at IWM drop to 155, and then it ends the week on Friday at 146. My strike was probably around 154. So if I didn't close it for 50%, this week would have been a losing week for sure if I waited till Friday. So yeah, by closing at 50%, I definitely missed out on profits, but I definitely saved a big loss over here by always closing at 50% profit. If I had gone to expiry, probably what I would have done, remember my strike is 154. So around Wednesday, it's at 154. It's still safe. But then Thursday, it gets tested, it gets breached. So at this point on Thursday, I would probably sell calls at the same strike as my put, which is the 154. I would sell calls, collect maybe, I don't know, $2, $3, depending on, the VIX is higher. So definitely I could collect a lot from the calls. Plus, I have 1 day to go. So let's say I collect $3 from the calls. So I collected $1, let's say 50, just to make things simpler. $1.50 from the put, $3 from the call. So I've got $4.50 that I collected. So my break even is now 154 minus 450. So my break even is about 149.5, and it closes the day at 146.3. So if I had gone till expiry, I would have lost about $3 in this case, or $300 if I do one contract. But most likely I would have closed it for 50% on the same day. So close at 50%, week ends up profitable, $75. If I had gone until expiry, would have lost $300. Would have lost $300 here, but would have made double of what I made up earlier. But I know myself, if I see a 50% profit in the same day, I'm not going to wait three more days and take the risk. I'm just going to close it. Because here I'm just doing one contract, but eventually I would be doing maybe 5 contracts. So I'm not going to take the risk with 5 contracts. All right, so I got my capital back, got my profit. Next week, IWM opens at 147, VIX is at 33. So I'm probably going to go to 140 strike, 139 strike, maybe collect, let's say, another $1.50. So I'm at 147, same day, it goes to 151. So maybe I get a chance to close it for 50%. Maybe I don't take it. On Tuesday, it reaches 154. I definitely take that chance and close it at 50%. So another $75 here, another 50% winner for sure. I'm not going to go till Friday because I got the chance to close it for 50% on Tuesday. I'm definitely going to take that. If I had gone until Friday, it actually would have been a winner as well, because my strike is about 139, I said. So yeah, it would have been a winner as well if I had gone till Friday. But most likely I would not have gone till Friday. All right, so then next, I got my capital back. I'm good. Next Monday, look at that. 134. IWM closed on Friday 144, opens on Monday 134. VIX is at 54. Beautiful. So definitely I can go further and I can collect more. So I can probably go, let's say, 12 points away. So 134, let's say 14 points. So I'm probably going to be at a 120 strike in this case. I'm going to collect maybe $1, let's say $2. I'm going to collect $2 or maybe $1.75. Let's just say $2. I'm going to collect $2 and I'm at a 120 strike because VIX is at 54. So premiums are higher for sure. And 120 strike. Okay, I collected $2. The same day it goes to 136. Does that give me enough chance to close it at 50%? Probably not. So I hold on to it. It drops to 130. Not good. The next day it's at 134. I might get a second chance to close it at 50%, but probably not. And it drops to 128, so that's not good. Next day it's at 130, 132. Maybe when it's at 132 on Wednesday, 2 days have gone by and it's trading at 132, I might have a chance to close it for 50%. So maybe I'll close it there for 50%. If I don't, it drops. And then on Thursday, it drops to 116. So that's really not good. It broke my strike of 120. It even drops to 111. So now I'm regretting not closing it at 50%. In this case, once it's at 111, I would definitely, or even at 116, I would start selling calls. I would sell calls at a 120 strike, the same strike as my put. So creating a straddle and trying to collect as much credit as possible. Because I can't lose on both sides. I'm not going to lose on the call side and lose on the put side at the same time. I'm either going to lose on the put or on the call side. So right now I'm assuming that I'm going to lose on the put side because it's below my 120 strike. So I'm just trying to collect free credits from the call side. So if I sell calls at 120, I collect, let's say, $5. VIX is at 75. Okay, so it is possible. And so I collected $2 and $5, so that's $7. So my break even is 120 minus 7. So it'll probably be around 113. And it continues dropping to 111. So at this point, I'm down $2 after break even. The next day it goes to 118. So I've got my put that I sold at 120. I've got my calls that I sold at 120 as well. So this is Friday. So actually, I could probably close the trade at some point here. I collected a total of $7. I could probably close the trade maybe for $5 because at this point, I collected $7 here in total and VIX was at 75. And then the VIX dropped to 57. So that drop in volatility will make the premiums drop in value. So that $7 that I collected, I can probably buy it back for maybe $5, especially that IWM is trading near my strike of 120. So I think this week would have been a winning week if I managed it correctly and I didn't panic and I didn't stress and close it for a loss. Even if I had held on till expiration, it would have been a winning week based on what I just explained. But most likely I would have closed it for 50% at around here. Either on Tuesday or Wednesday, I would have closed it for 50%. And I said I collected $2, so 50% will be $100. So this would have also been a winning week if I had closed it at 50%, and most likely I would have. And even if I didn't, it could have been a winning week as well, but with much more stress. All right, so I got my capital back, and guess what? Next Monday, IWM 108. So definitely good thing I got my capital back. Good thing I closed my trade on Friday or before, and I wait till next Monday to place my new trade. IWM is at 108, VIX is at 82. I'm definitely going to go probably 18 points away. So let's say 90. Let's say my short strike is 90. I collect, let's say, $2, $2.50. So 90 strike. So from 108 to 111, I probably get a chance to close it. Probably don't take it. And then it drops to 101, 103, not good. Tuesday, it's at 104. Remember, my strike is 90. So definitely on Tuesday, when it's trading at 110, and my strike is 90, and when I opened the trade, it was at 108. I think here I have the chance to close it at 50%. Plus, VIX dropped a little bit from 82 to 75. So I think on Tuesday, I would have closed this trade for 50%. But let's say I didn't, and I held on till expiration. You could see that it reaches 96, reaches 95. Even if I went till expiration, I would have won. I would have kept the full premium, but most likely I would have closed it for 50%. And I said what I collected, maybe $225, $250. So let's say made $125 profit in this one. So even with VIX at 82, selling puts still works as long with this approach, in my opinion, as you can see, which is Monday to Friday. But if I held it from Friday to next Friday, going through the weekend, you could see that I would have gotten destroyed. Or even if I had done a 2-week put from 134 to 104. Selling puts is an option strategy, but the approach used is what can be different from person to person. And that's what can make the difference sometimes. So just going back and back testing this with March, you could see that Monday to Friday in this case would have been the better approach. And I think March was one of the worst drops ever. So if this approach works for one of the worst months ever, so you could say that it's a pretty good approach. And this week would have been another winning week as well. Then I got my capital back and I start on Monday again. IWM opens at 101. So VIX is at 61. So that's weird. How come VIX is at 61 when IWM is at 101? But in this case, it's 108 and it's 82. So Monday, March 16, let's just make sure we've got the same thing here. Monday, March 16. Yeah, VIX is at 82. It closed at 82. Okay. All right, so where's my Monday? So Monday, it opens at 101. I'm probably going to go 15 points maybe. So let's say 85 is my strike. Let's say 85 is my short strike. Either one goes to 102. I don't get the chance. Goes to 95. I don't get the chance to close it for a profit for 50%. Tuesday, it's at 105. Reaches 109. Definitely, it's closed for 50%. And let's say I collected $2, so that's a $100 profit for that week. I closed the trade early. I did not reach expiration. If I had gone to expiration, guess what? It would have been a winner as well. My strike is 85. My short strike is 85. Never got tested. So that would have been a winning week regardless if I had gone to expiration or if I closed at 50%. But like I said, I most likely would have closed at 50%. Knowing my stressful self, I would have closed it for 50%. So I got my capital back. Good. Next Monday, IWM is at 113. VIX is still pretty high, 57. I would have a strike of 100 in this case. Collected maybe, I don't know, $1.75. So let's look. 113 to 115 in the same day. Probably not closed it. But then Tuesday, it goes to 116. Would have closed it here for 50% for sure. I said I collected $1.75. So let's just say $100 profit, because I don't know what half of 175 is. So another winning week. And if I'd gone to expiration, it would have been very close. It would have been a winner, but very close. So then next Monday comes along. I have my capital back. Next Monday comes along, April 6th, 109. IWM is at 109. VIX is at 45. And look at this. It just flies it just closes on Friday at 123. So most likely on Tuesday from 109 to 116, or even the same day from 109 to 113, this would have been closed for 50% for sure. So let's say I collected $1.50 on this one, so probably made a $75 profit. So like I said, I'm not sure about the premiums. They're estimated, but you could see that they would have been winners. So I'm going to stop at April because after that, market just kept going up. So it's obvious that the rest were winners. I mean, even as you could see, even in March, they were winners. Just 1 week was very close to being a loser, depending if you had closed it for 50% or not. So if we add up my estimated premiums, it gives me $1,000. That's if I just did one contract. And that's from January to when did I stop? Did I stop at April? I think I stopped at, I stopped at April 9th. So the premiums are close. They're estimated. They're not 100% accurate, but it gives you an idea. Pretty good idea that I think selling naked puts in March 2020 would have actually worked using this approach, Monday to Friday. So let me know what you think. I'm open to all feedback. You've seen my thought process, so let me know what you think in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use one of my referral codes below. One of them gives you up to $250 back depending on your deposit. The other one gives you $50 in free trades regardless of your deposit. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.